Welcome back to this special chat with Professor Damodaran. Well, Professor Damodaran, the first question I want to ask about India is demonetization. What did you make of it?
I have mixed feelings. Let's suppose demonetization had happened and nobody had noticed. That would have been a sign that didn't work at all, right? Because if you truly have demonetization, it should, especially in a country like India, there's going to be pain. That's almost a given. You're pulling 85% of the currency from circulation in a cash-based economy. That's going to be paid. And the question that we still don't know the answer to is who felt the pain. For the moment, it looks like the people who felt the pain were not the people that were expected to feel the pain. But we won't know. I think that's why I'm going to hold back on my judgment on this. Because if it truly hurt, we're going to find out in terms of the long-term impact on some sectors, which were primarily driven by black money. But I think that if they went into this thing expecting little or no pain, and it's clearly unrealistic. So the fact that there was pain doesn't surprise me. The question is whether that pain was worth it in terms of actually pulling back black money out of the system. I think that ultimately, if you want to stop tax evasion, you got to have an attitude change. Demonetization, you can have that shock to the system and try to get money out. But the attitude change you have to have is we have to think about people who pay taxes as the good guys and people who don't as the bad guys. Okay? We have to think of paying taxes as a civic duty rather than something suckers do, and if you're smart, you don't do it. And that attitude change comes from a trusting governments with your money, and second, feeling that this is fair. That's why Northern Europeans are such good taxpayers. They feel the system is fair, and they feel that when the Swedish or the German government collects the money, it's used well.
Well, one of the noisiest policy decisions in India is the budget. Do you think the budget can make a difference, if at all, and what should it do to make a difference?
I remember when I was growing up, the entire business world would shut down on budget day because the fate of the economy was determined by what the Minister of Finance said that day, who was going to be punished, who was going to be rewarded. And I think that's very unhealthy. An economy should never be driven that much by what one person says or what the... So I think that the healthiest day for India will be the day when budget day comes and goes and nobody even notices.
You will have to admit that it is increasingly perhaps more a media event, and maybe the economy comes back or even the markets come back pretty quickly. But nevertheless, what can the government do at all, since it is a day on which policy is under the lens?
I operate under the principle that less is more. Right? So it's better that you do fewer things and you do them well than try to do everything. So I feel that about taxes, I feel that about budget policy, I feel that about trade policy. Because I think governments around the world have technocrats and experts who give them lists and lists and lists of things they can do. As much as rather that they said, these are the 3 things we're going to do. Because I'm a teacher and I know that this is something I follow in my class. I walk into class, it's an 80-minute class, and I say, what's the one thing I want my students to remember after this class? Not what are the 10 things, because I've discovered when I try to do 10 things, I do none of them well.
If there is a global recovery, at least that part is there. What about the India growth story? Is that convincing you?
I think that it's not so much a global recovery story, but I think there's a for a decade we've been caught almost in this low interest rate, low growth, almost deflationary environment in developed markets. I think this might be the year where we see a break, and this year will be a test of what will markets do, because we've become so used in valuation now to 2% rates in the US dollar and 0% rates in the euro, that I think we've forgotten what it even means to actually value companies in a more normal, because if somebody's joined a valuation practice in 2008, 2009, they've never valued a company with a 6% risk-free rate in US dollars. I don't even know whether they can take the shock to their system, because so much of what we do has kind of been shifted by what's happened in the last decade. So I think that global growth will be under stress, partly because you're going to have a couple of elections in Europe. You're going to start to see things play out there. But I think that India will come out of that, I think, much more healthy than many of the developed markets are. So I think on a relative basis, and that's all we can talk about India looks good. I mean, think of the BRIC, right? It's in fact, I think, the healthiest of the BRIC countries left, because Brazil is a fiasco. Russia is, of course, always Russia. And China is too large to keep growing at the rates that they have. So last man standing. So from that perspective, it's good news.
What about valuations within Indian market itself? Is there any piece that attracts you, say the Tata piece or the Reliance piece or the IT piece, which is under a lot of pressure? I mean, have you looked at the individual subsectors of stocks?
I'm always a little cynical about investing in family group companies.
Okay.
Part of the reason for that is not that they're not good companies, but the nature of family group companies is you are at the mercy of the family. Whether you like it or not, it is still run by families. And that exposes me to things that I don't control. So from that perspective, I always start off with, you've got to be much more undervalued as a family group company for me to jump in and invest in you than if you're not a family group company. So, and in a sense, what's happened in the Tata Group kind of adds to that caution of, even if it's a good family, you've got to watch out for the fact that family group companies are still family group companies.
I was going to ask you about the Tatas. Now that they have the first non-Tata as their chairman, how are you, as an investor, should an investor value them better? Or should the investor value them
I think what's interesting is they're facing reality. It's really not the Tata Group anymore, right? It's TCS and Seven Dwarfs, basically. It's really, TCS is the Tata Group. Everything else, though the history of the Tata Group might be in Tata Motors and Tata Steel and Tata Chemicals, the reality is TCS is now 75% of the market cap of the group. And if nothing else, what's happened at the Tata Group is a recognition that if TCS is not healthy, you can do all the tweaking you want at the other companies, and nothing's going to happen. So I actually think it's a step in the right direction of saying, we don't want an old-time Tata hand from Tata Steel or Tata Chemicals running this group. We have to have the center of the group, basically, right? It's not just the crown jewel, it is the entire crown, right? So from that perspective, I think it's a step in the right direction. You've got the right company's person in charge, and as a non-family group member, it'll be interesting. I think my test will be, and this is my test with any corporate governance, is I'd like to see an action taken by the Tata Group that the family does not want taken, and I want to see it go through, and then I know that you're really on a pathway to help.
Okay. That we will have to, of course, wait and see how much Mr. Chandrasekhar is allowed to be his own man. But what about the other pieces in India? Which piece attracts you? Is it the infotech piece, the TCS piece, which has so far benefited from globalization, or will it be the more domestic story? The financial sector is going through so many changes. Bank licensing, banks largely, in a sense, the licenses are coming free. Will the finance piece attract you?
I'm going to suggest one of the things that we might want to watch as a result of demonetization, in addition to the financial services, the retail sector. For 50 years in India, we've been telling the world, retail in India is coming, it's coming, it's coming. But it never seems to come, right? That breakthrough of great retail businesses in India has never happened, partly, I think, because of the hold of the cash economy. Indian retail is still so cash-driven that you've been able to have mom-and-pop businesses continue.
Yes.
Maybe one of the things that this demonetization shock to the system might create is finally we might get that breakthrough up. Because this should be a great retail market. I should be investing in great Indian retail companies. What I found whenever I've looked at Indian retail companies, they're really real estate companies that seem to run stores on the side. That's been the history of Indian retail. It's been more of a real estate game than a retail game. I'd like to see a really great retail company. And so if I were looking at a sector, that's the sector I'd be looking for. Who are the and I'm not just talking about the Flipkarts, I'm talking about the brick and mortar retailers.
No, I get you. I mean, is not HDFC Bank a great retail bank? Is not Asian Paints a great retail story? Why do you say you don't get retail stories? I
think retail stories, in the sense, I'd like to see a grocery store chain in India. I'd like to see an apparel chain, which really is about the retail half, not the real estate half. And I think that's what I'd like. So you're right. In the banking sector, you have retail stories, But in the traditional retail sector, I don't see the equivalent of a great company that's been a truly retail story.
Okay, so that's how you expect digitization to play out. One of the impact could be, you know, a national retail chain.
Exactly.
What else? I mean, if you have thought through, we will be a little more digitized than we were before November 8th for sure.
Healthcare, I think, is, I mean, obviously when you have 1 billion people, and more of whom are aging, who are now using healthcare they never did, this is obviously a business which is ripe for all kinds of things, technological advantages, digitization. So I think that's clearly a growth business, and it's not just the hospitals and the medical services and the pharmaceuticals that are going to benefit from it. But as you can see in the U.S., it's an entire ecosystem around healthcare that I think is worth looking at. I'd be interested in companies that are building off not just providing the healthcare, but the data of healthcare, the information that comes out of the system. So I think that's obviously a place that I would look at, especially with the numbers that we're talking about here.
Okay. You know, you're the guru of valuation. So I can't end this interview without asking you, what would you tell you know, the zillions of investors in India who are looking at valuing literally thousands of companies?
Don't listen to experts like me. And I think the reason I say that is, in investing, I think the worst practice you can have is to not take responsibility for your own decisions. Part of the reason, and one reason I get uncomfortable when people talk about valuation gurus and investment experts, is we use them to pass the buck. Okay. We let them tell us what to do, because that way when things don't go well, we can blame them. I think we need to take ownership of our investment decisions.
Okay, tell us what will work in 2017 as we stand at the start of the year. Will it be a year of equities? Which equities?
It'll be a year of shocks. So basically, you've got to have the capacity, you've got to build in escape hatches into whatever investment strategy you have. Don't have the hubris of saying, I am so convinced that things are going to happen that I'm going to lock myself into this no matter what. No matter what should never be the 3 words you use here. You've got to watch things happen, and you've got to reassess what you do. I call this keeping the feedback loop open. Now listen to the rest of the world and adapt, because I think that this is going to be a year where you have to be extraordinarily adaptive to come out of the year healthier than you were going into the year.
And the red flags would be? Would it be a Trump bet that wouldn't work? Would it be a Europe that will fall apart? Will it be a China that doesn't live up to the promise of 6.5% growth?
It could be all of the above, right? And it could all happen this year. I don't think, and I think this is the thing. I think this is the way the world is going to be going forward. This is one of the other aspects of globalization, right? If you notice, since 2008, every year there's been a crisis, right? And there are businesses that say, once this crisis is over, then I'm going to go back to making decisions. And so there's a crisis, they say, oh, now the crisis is over, another crisis comes about. Maybe we have to get used to the fact that every year there'll be at least 1, maybe 2 crises. That we should maybe stop calling them crises. Stop freaking out about these things. And this is the way of the world. I've got to build it into my investment decisions and act like this is part of the risk of investing.
Well, usually after a conversation, I try to wind up by saying these were my 3 takeaways, my 5 takeaways. But today, Professor Damodaran tells us that try and get one takeaway, and I think that one big takeaway he gives us is don't ever say no matter what. Always reassess your chances and reassess your investments. Thank you very much, Professor Damodaran, for that very big lesson.
Thank you.
Pleasure speaking with you.
Yeah.